We are still in part E, which is preparing a trial balance. So for today, we are going to do balance reconciliation, which in this topic also we are going to do correction of error for this cash book. Having studied this chapter, you will be able to understand the purpose of balance reconciliation, identify the main reason for differences between the cash book and the bank statement, correct cash book errors or omission, or prepare balance reconciliation statement and identify the bank balance to be reported in the finalist account, and derive bank statement and cash book balances from given information. So this is the learning outcome that you need to capture. We start with the meaning of the balance reconciliation. A balance reconciliation is a comparison between the bank balance recorded in the books of a business and the balance appearing on the bank statement. And the cash book of a business is a record of how much cash the business believes that it has in the bank, whereas bank statement is sent by bank to its short-term receivable or payable, which is customer with bank overdraft and customer with money in their accounts. So between these cash book and bank statement, we are going to compare the balance of this cash book and bank statement, and we will do reconciliation on this. So this example of the bank statement. So for the bank statement, we have the significant item in this statement. The first one is the number A. Here is the date of the statement, which is the statement printing is at 30th June 2007, which is at the last date. And then the B is the account number, which is a business, the account number of the business with the bank. And the C here is the date of transaction. And the D here is the balance on which sheet that we are going to continue, whereas this is D here is the sheet that we are starting with this statement. As for F is the balance that we wrote down from the previous statement, and this is 00 partner is the check number, and the H here is the GD, which is here we have the note here, which is direct debit, and the J here SO, you can hear is the SO is standing order, and J K is K. This is K. K is this is for the bank charges. Same for the interest. And this is H. This is the number for the deposit. The transaction number. And this is the balance to date as at 30th June. Whereas the C, E here is the key for each short form here. The purpose of balance reconciliation is to check the accuracy of the cash book posting by reconciling the balance per cash book to the balance per bank statement. So by comparing with the balance per cash book to the balance per the bank statement, so we can check whether any cash book posting missing, or we can check the accuracy of it. So this is differences between cash book and the bank statement. The first one is timing differences. One is outstanding lodgement of deposit credited after date. So this is money paid into the bank by the business but not yet appearing as a receipt on the bank statement. So the timing differences, this refer to the time lapse for the deposit being credited in the bank and appear in the bank statement. As for the book of the business, this transaction has been recorded, whereas in the bank statement, this is not appeared because there is a timing error in this bank statement, because the check or deposit of the check is not clear yet in the bank, so it won't appear in the bank statement. So another one is unpresenting of outstanding check, which is check paid out by business which have not yet appeared on the bank statements. This is similar as number one, just that this is a check received. As for number one is the check, the number one is the check received, whereas number two is the check paid. So this check is already been issued by a business, so for the business is already a record for this payment. But as for the bank statement, the check is still in transit, means it's not being cashed by the person received the check, or it was already sent to the bank but it's not cleared yet. So this amount will appear in the bank statement. The next is item on the bank statement not in the cash book. So this is an item that you will find in bank statement. In the cash book, there is no stated for this item. The first one is standing order, or you can write down as SOS, or direct debits, DDS, credit transfer, bank charges or interest, dishonored or bound checks with the check written back, and bank errors, which is the error made by the banks. Whereas this is cash book error. This is happen in the cash book. For example, this is a cash error, casting error, the calculation error, transposition error, omission error, and the application error. So we go on detail-wise. The item appeared in a bank statement but not in cash book. The number one is standing order. So this is an instruction given by a payer to its bank, telling the bank to pay a fixed amount on predetermined date to a third party. So in this situation is that a business asks the bank to pay on behalf of a business at certain date to the to its payable. So the amount is the fixed amount. So as the third party payable, for example, payable, there has no power to request payment. The payment is the amount that been asked by a business to pay on behalf of the business to the third party. And that is the direct debit, which is similar to the standing order, just that the amount is fixed or variable. It can be fixed, it can be varies. For example, it is amount for the pay for the mobile phone or utilities. So the amount will be different according to the usage of the phone or utilities. As for the loan repayment, the amount is fixed. So the bank will pay on behalf of business at a specific date. So this amount will be appeared instead for standing order or direct debit will appear in the bank statement. And then this dishonored check, which is a check that has been issued by a business, as for the of the business is already credit cash, and for the payable is already debit, they issued for the bank. As for the bank, when this check is dishonored, it won't appear in the bank statement, or if it appeared, you can see it will appear in both sides. One is for the check being issued, and the one is for the another side is for the check dishonored. So for this check, dishonored check, okay, when this dishonored check transferred to payee, so the liability or the debt to the payable is not discharged. So the payee need to make another payment because the previous check is the bound checks. So this is the reason for the dishonored check. One is the post-dated. It is a post-dated check or the outdated check. Post-dated means that the check is for the future date, as if the person received a check sent to the bank before the date, so this become the bound check. Same as the out of date. So the date, the check sent to the bank, but the check date is already outdated, so it cannot. So it become a outdated, dishonored check. So no money can be transferred to the business as the stated in the check. There is differences between the amount returned in narrative and numerical. The account has been closed and cannot be traced. The payer has put a stop on the check, and the payer has exceeded the agreed overdraft limit. This is a point to note. The first one is in the book of the business. So if the balance is positive amount, so this is the asset. So the balance is the debit balance, as the balance negative. So that one is the liability. It should appear as a credit balance. As for the bank point of the view, positive balance, which is liability, it should credit. Means that the banks owe you money, because as for the bank, the business is the creditor for it, because they use the money deposit for the business transaction. As the negative balance, which is overdraft, so this is a set or debit balance for the bank, because the bank will receive payment from the business, including with the interest. So this is an asset. for the bank. So you need to know that as for the bank, for the normal balance, it will show credit balance in the bank statement. As for the cash book, for the normal balance, it will show the debit balance. So this is a step for reconciliation procedure. The first step is to identify cash book adjustment and bank statement adjustment. So for when comparing for the cash book and the bank statement, so we will identify which amount appeared in the cash book and not in the bank statement, and same appeared in the bank statement not in the cash book. So this company need to identify the adjustment. And then number 2 is the correct or amend the cash book requires double entry. So we already identified the adjustment, so we need to do the double entry related with the cash book. So we will amend the cash book balance. And step 3, adjust bank statement balance for timing differences and bank errors. For this is the statement reconciliation for the bank statement. As for number 2 is the reconciliation as for the cash book. So this is a format for reconciliation. We have 2 formats. One is when used for balance as for the cash book, and another one we use the balance as per bank statement. So when you use the balance per cash book and the balance for the bank statement, initially this balance won't agree, do not agree. So you must do reconcile for this one. If the balance is agree, so we need not to do the reconciliation. And then the step number 2, you adjust cash book for all errors and item on the bank statement, not in the cash book, except bank error to give up to date balances. So this one for reconciliation for the cash book, you just take any figure that appear in the bank statement and you adjust in the cash book accordingly. If debit in the cash book in the bank statement, meaning that this is the amount out from the business, you should credit. As the amount appear in the credit in the bank statement, it means that this is a cash in the business, so we need to debit. After that, after we do the adjustment in this cash book, we will find out the balance, new balance. So this is the balance credit, carried down the new balance. And then after we do reconciliation as per the cash book, so we do reconciliation for the bank statement. So the amount that should be adjusted for the bank statement is the amount that appear in the cash book, not in the bank statement. For example, the outstanding lodgement or outstanding deposit we add, and the unpresented check we minus. As for the error of the bank account, we look at what error is it, whether to add or to minus. Lastly, we will get the balance, adjusted balance for the bank statement, which is similar with the balance carried down of the cash book. So this balance now agree. Okay, let's go example number 1. So the question asks you to do adjustment for cash book and prepare a reconciliation statement. And then you need to do double entries for the adjustment. So this is adjusted. First you need to do adjusted cash book and reconciliation statement. So first we need to identify cash book adjustment and bank statement adjustment. We have 9 transaction here. One is the unpresented check. We know that this is appeared in the cash book, So the adjustment should be due in the bank statement. As for B, the receipt side of the cash book was under cash, so this error made in the cash book, so it should adjust in the cash book. And then number C, order, standing order. This transaction occur in the bank statement. We can see this statement will appear this amount, not in the cash book, so the adjustment should be done in the cash book. And the outstanding deposit, this one appear in the cash book, not in the bank statement, so adjustment should be done in the bank statement. So bank interest appear in the bank statement, so we need to adjust in the cash book. Receipt 362 incorrectly recorded as 326. This happened in the cash book. We need to adjust in the cash book with the different amount for this one. So this one is incorrect record short. So we need to add back this amount. So it means that we need debit. Receipt or credit transfer in respect of property fund. Tax refund, this is appear in the bank statement, so we need to do adjustment in the cash book. And then this is error made by the bank. It should go to the No Brothers business, but bank mistakenly record in null account in credit side. We need to do adjustment in bank statement. And this one, receipt from receiver has been recorded as credited in the cash book. So this happened in the cash book. Need to adjust in the cash book. So since this error is happen in the wrong side of the entry, so it should be debit or receivable for the cash book, because this is amount received, but this company has wrongly credited this amount. So when you do the adjustment, so when you need debit back this amount with the double amount. First you need to clear the credit side you have done before, and then you add back the 400. So the amount you need to do adjustment is 800. So this is a cash account adjustment or cash account reconciliation. So we started with the balance credit 651. So this is the amount that appear in the debit side of the bank statement. So you just credit this figure in the credit side, whereas for this amount appear in the bank statement, so in the credit side, so this is the cash in, so you debit with the amount that appear, just that the error, this error incurred in the occurred in the bank cash book, so it should debit the cash book, but happen business is wrongly credited the cash book, so we need to debit back with the double amount. As a transposition error, we just take out the difference amount. So this is have been wrongly record the less amount, so we add back another 36. So end up with the we get a balance of 70, the credit balance. As for the bank statement, we take the balance of the bank statement, which is 995. So we have only 2 items that appear in the bank cash book, but not in the bank statement, which is outstanding lodgement and unpresented check. For the outstanding lodgement, we add, unpresented check we minus. And the error made by the bank, which is 1,000, should go to the no business account. So you wrongly credited to no account, so we need to minus back this amount. So at the end we will get the balance for adjusted cash book, which is 70 also, which is the as the bank, this is a debit balance. So we have now the amount is agreed. So this is double entry for the cash book adjustment. So for double entry, you just do double entry related with the cash book adjustment. So for the A, this is related with the bank statement. It appears in the bank statement, so we not need to do entry for this one. And this is because of the undercast, the entry is already correctly recorded, so no need to do adjustment. For the C, we do adjustment because this is expenses. We debit expenses, credit cash. And for the D, no adjustment because this is happening balance bank statement. So next, this is the interest charge. So we debit interest, credit cash 140. And the cash receivable, this is a transposition error. We just take the different amount, which is 36. So since the amount we record is less than the actual amount, so we debit back the trade receivable and credit cash 36. As for this one, is the refund from the tax. So this is appear in the bank statement, in the cash book. So this is a receipt with debit cash, credit property tax expenses. So with the 75. So the number H, this is adjustment for the bank statement. So no entry need for this one. And lastly, so with debit cash 800, this is the double amount of the mistake, and credit suspend because this is error only mistake in the cash book. It should be debited, we credit for the cash book. So there is imbalance, trade balance with the 800. That's why we need to credit the suspend account. This is how you will learn later in correction of error. This is example 2. So the question asks you what balance issue on the bank statement at 31st December 2006. So this is the calculation backward because the question asks you what is the balance that appear in the bank statement before adjustment. So this is the information given. The cash book will have the balance of 554. And all receive a bank and payment by check. So this is the investigation made. So this is the mistake. The number one mistake is that a bank charge 136 enter on the bank statement, not enter in the cash book. So this is should be adjusted adjusted in the cash account because this appear in the bank statement. Check drawn amounting to 267 had not been presented to the bank for payment. This is an outstanding check. So we need to do adjustment in the cash book also. A check for $22 had been entered as a receipt in the cash book instead of payment. This is also happening in the cash book. So we need to adjust in the cash book. This is check. This is check payment actually, but record as received. So this is also we need to credit back the cash book with the amount, with the double amount. So lastly, check loan $6 have been correctly entered the cash book as 66. So this is our credit for the cash book. So what balance show in the bank statement at 31st December 2006? Let's see which one is related with the bank statement, not in the bank statement, or number B. So then first we need to do the adjustment for the cash book. So this adjustment, we have balance, adjusted balance 554, the fine charges, a check entered This is a check that should be credited but wrongly debit for the cash book, so we need to credit back with the double amount. 22 now become 44. We will need to credit back with the amount of 44. And then this adjustment in D. What is adjustment for D? So adjustment for D is check. Oh, this is check drawn record. Drawn for $6, but I correct record into the cash book for 66. So we already credited more $60, and we need to debit back $60. So at the end we'll get the balance of the cash book 674. This is the amount should be appear in the financial statement, but the question asks you what is the balance bank statement before adjusted. So you need to do the calculation backwards. So we started with the balance, this one 674, and this is a check issue not yet presented. After adjustment, the adjustment for this check we need to minus. So in order to get the balance per cash bank statement before adjustment, we need to add back this figure. So the balance per bank statement at 31st December 2006 is 407, which is negative balance. So this is all related with the bank reconciliation. So I hope that you do all the exercise of the lecture example in the course note for the topic of the bank statement. So we will discuss the answer in the lecture example in the class. So see you again next video. Thank you.